Welcome to Get Real, your go-to destination for all things real estate. I'm Gilbert Gonzalez, your host and the CEO of the San Antonio Board of Realtors. In this episode, we're joined by Keri Moses, Senior Vice President of Mortgage Lending at Jefferson Bank. Keri will be shedding light on the topic of mortgage rates. Welcome to the podcast, Keri.
Thanks, Gilbert.
Thank you for joining us. And as always, we want to thank Jefferson Bank for being such a great sponsor to our organization. So let's start off there and say thank you for that.
Thank you, Gilbert. And you've been great for our business as well.
So I wanted to bring someone on the podcast who can talk about interest rates. In particularly, I feel like all of our members have said so many buyers are just afraid of the current interest rate. They want to go back to this 2%, 3% that was present a couple years back. And I'm not the expert, so we brought in somebody who would be an expert to kind of shed the light on that. So I wanted to start off just in general before we get into that topic is, can you provide an overview of the current landscape of mortgage interest rates and how they've been trending recently?
Yeah, so COVID hit back in 20 and it kind of came out of nowhere. And in the business for as long as I've been in the business, I thought those rates were low, but I saw rates the lowest I have ever seen. I was shocked at how low they were.
And what's that number?
Twos. The twos. I think my lowest 30-year fixed rate interest rate was for a darling girl. I still remember her name. But I got her a 2.5% 30-year fixed rate on a $250,000 mortgage.
Nice.
Yes, we will never, ever see that, in my personal opinion, ever again. But rates started trending up in really towards the end of 2022, beginning of 23, because the federal government started buying mortgage-backed securities in 2009, and they ended in March of 2022. So it took some time to really see where rates actually should be.
Now, you mentioned that the government was buying rates. Is that what the key factors contributing to the rise of interest rates? Is there other things that you would say or why they keep going up?
Well, for sure, inflation. I mean, my gosh, you go to the drive-thru to pick up dinner for two and it's $30.
Yeah.
Things are so expensive. Groceries, it's just expensive. And
so mortgage interest rates are just like everything else. If everything's going up, then this is going to go up.
Exactly. And the economy is very good and strong. And when the economy is very good and strong, that's when rates I've seen in my experience tend to go up.
So let's jump back into you will never see it again, this 2.5. How can home buyers expect these new interest rates to affect them?
They're going to have to kind of really rethink. When my buyers call me, it's very important to say, what do you want your monthly payment to be? And they always come in quite a bit lower than what it's really going to be. And honestly, too, when you add our property taxes, because our property tax rate is so much higher than a lot of other states, you add that all in, and it's a lot right now. A lot more than we've seen in years, probably since 2000. So it's been over 20 years since we've seen rates this high.
So when they come into you and they say, I want my payment to be $2,000 a month, and you know that that's going to be a little bit difficult, we don't tell them, okay, you're just not going to buy a house. What do we tell them in order to get them comfortable with the idea of here's some things that we can do to make it possible for you?
Right. So right now, $2,000 a month in general going to get you about a $200,000 house.
Knowing that the average house right now is somewhere at $350, there's the pressure point.
That's the problem. There's just not as many affordable homes. But they're out there because I get contracts all the time. 180, low 200s. There are houses out there for sale, but you just have to you really have to get with that right real estate agent to find you that right house.
Because the realtor has access to everything that's for sale.
Exactly.
So they're going to find you the house that you can.
100%.
Now, when people come in and they say, I'm not going to be able to afford, or I want that $2,000 monthly payment, do they immediately blame it on the interest rate? And that's where you try and convince them it's not just the interest rate, it's the whole market as a whole?
Well, and then honestly, too, when a buyer does come to me and they say, I want my payment to be $2,000, I say, okay, let's get you started with getting pre-qualified. And sometimes I'm like, okay, $2,000 a month, that's a $200,000. But you know what, sir? You have a really good job. You have great credit, not much debt. You could really go up to $350,000. And let me explain to you how that works. Also, by owning a home, you have been having this great W-2 job you've had for years, making good money. But guess what? You have no tax deductions on your tax return. When you own a home, you get a write-off almost all of your interest and almost all of your taxes, just depending on what price point you're in, because they have put some caps on the amount of tax and interest you can write off on a home.
Now, how is this affecting people who are looking to refinance their mortgages? Are most people just staying where they're at this point?
100%, because almost every single person out there's got a low rate. Because if you didn't refinance in 2020, 21, or 2022, and you heard everything on the news, then you lost out. So if you missed out,
You are where you are.
Exactly.
You just got to keep waiting.
But I, you know what I'm doing a lot of right now? Not so much refinances, but people are wanting to pull a lot of money out of their homes right now. So for those people that have been in their homes for quite some time, we're doing some equity loans for them. And that's been helping them out because a lot of people are strapped for cash right now. Or maybe they got into credit card debt because of COVID. So that's helped a lot of people out. Okay.
So the next question is, how do you foresee these rising rates influencing the housing market in the near future? But my question is, are we going to see the rates? Before we get into that question, are the rates continuing to rise, or do you think that they're going to stick around this point for a little bit?
I think we're going to hang out where we are right now. Rates have actually tipped down this week, the lowest they've been since March. So we went from but that's just where rates are right now. And you can't control the housing market and you can't control interest rates.
Strategic advice would you offer an individual navigating the current market conditions in the terms of securing a mortgage?
Well, number one, like we mentioned earlier, you've got to align yourself with a great partner to help you find that house. Maybe find your banker first. Make sure you qualify before you waste someone else's time. See what you can afford and find out what that monthly payment is. I've had a lot of people on desk like, oh, that's it? It's not that bad. Everyone thinks, oh, the rates were so high, my payments would be so high. But maybe it's not as high as you've envisioned in your head. And the homes are only going to continue to go up in San Antonio. So the longer you wait, the more you will spend on a home.
And for the current homeowner who is afraid to get out of their house because they have a 2.9 interest rate, I assume that they have earned a lot of equity in their home, which if they take that equity and buy the next house that they want, which maybe is valued a little bit more, their payment still is going to be somewhat reasonable if they're taking the equity that they earned over the last 3 years. So if you're really afraid, my interest rate right now is 2.5 and the current interest rates are 6, I can't really afford that. You will be able to if you just use some of that equity that you've grown.
Well, and the more money you put down, the lower your payment is. And what they call that, I read this in the journal a couple of years ago, they call that golden handcuffs.
Okay, explain.
If you've got a 2.5% interest rate, and that is an amazing interest rate, and the rates were 3 times that high right now, but your house, you've had 2 more kids since COVID happened, all right, and you're a little pressed.
Right.
And a lot of people are staying put and they're not moving.
Now, but they should still be able to move.
They need to go out there and see what there is. Exactly. What's available, what's out there. Go look. It doesn't cost you a dime to go look. It doesn't cost you a dime to get pre-qualified.
And if you have that house, you have some equity, which really grew during those years.
Because that might have been your first house. And you didn't have any of that money because you had your little bitty bit down at that point, but it's your second house, and usually your second house, that's where you pull your equity out to put that hopefully 20% down on the new house.
Is there any opportunities or potential benefits to the rising rates right now and how to take advantage of them? They always say, buy the house. No, marry the house, date the mortgage.
Date the rate.
Date the rate. Are you not a fan of that one? Tell me why.
Well, a few years ago, everybody was saying that. They're not saying that so much because the rates have stayed high and they are not going down. Honestly, no one has a crystal ball. I don't believe that rates are going down this year. The Fed had said that they were going to cut interest rates this year. We're almost to June and they've yet to cut the interest rates.
But I think people need to understand why you're coming from that position, because it's not because you're saying it is what it is. It's because the current rate is actually not that bad.
No.
And you know that historically because of what it might have been on average over.
Exactly. So I did that when rates started going up. I did some research and I figured out the average interest rate for the last 50 years in the United States is 7.5%. So I'm telling my clients, that's the average rate. You know what? You're below average, and that's good. That's good.
And I know if I talk to people who've been in the business for a while, they always tell me, Gilbert, I remember when I was buying a house with 12%. And I remember that first house, it had an 18% mortgage. I can't imagine that. That sounds crazy. So 6% does not sound bad to some people because they locked in, or when they bought a house last time, it was a lot higher.
They're in the 7s, not the 6s.
The 7s right now?
Yes.
Okay.
The government loans are in the 6s, but the conventional loans are right at 7 right now with good credit.
Is there a better, the next question is like, are there way lenders are adapting their practices or offering in response to these shifting interest rates and dynamics? Is there a better loan product that you would recommend to people? Or you trying to find the right product for them, whether they're veterans, first-time home buyers, or
exactly
down payment resources?
Yeah. I mean, there's down payment resources. Also, I'm telling my clients now, honestly, yes, rates are twice as high as they were a couple years ago, but guess what? The market's totally different because back in the heyday, you had 50 other buyers trying to buy the same house. So in order to get that house, you had to bid way above asking price. You didn't even bother with an inspection because the seller wasn't going to fix anything, and the seller wouldn't even pay title policy. Now it's more of an even playing field. The rates are higher, so there's not quite as much competition. It's a better time to buy because you don't have a bunch of people trying to buy the exact same house. And almost all, I'm seeing every contract seller, almost every single seller is paying for the title policy. And if there's an inspection, they're going to pay closing costs. I have a deal going on right now on a conventional loan. And they have it's an expensive house, one new AC and one really, really old AC. So after getting all of the inspections done, the sellers say, okay, we'll give you $25,000 towards that house. That's too much for closing costs, but they don't want any money towards closing costs. They want to just reduce the sales price because that's that much less interest they're paying. And that was their decision. And I thought that was a great decision.
A lot of people are saying that the market just isn't friendly for the first-time home buyer. What are the resources that are available to assist them that maybe someone else who this isn't their first time house, but they get options for other resources available to them? Does that make sense? Like, is there anything available to help that first time home buyer? Yeah,
there's lots of down payment assistant options. There's ones for teachers and people that are in, firefighters, policemen, and all of that. So talk to your lenders and see what's out there. Make sure that those funds are available. They are set for the year, and when they run out, they run out. And I think that a lot of those have run out because I think a lot of people are using those because of the higher rates.
So I want to walk us through a specific example. I have a family member who is making great money. She just graduated with her master's degree. She's a professional. Let's just say she's making between $60,000 and $70,000. She wants to buy a house because she wants to be responsible. She's finding it really hard to buy a house though, because what she can afford perhaps isn't where she wants to live. Or when she does find something where she wants to live, it might be out of reach. What's the advice you give to someone like that? They're trying to make the right decision, but the market right now isn't necessarily the best for them. What do you tell them?
Well, what I would do, number one, is I would look at the whole picture. Maybe she's got some credit card debt, and that's what's kind of keeping her from that. So, right, I'm sorry, Mrs. Home Buyer, you can't buy right now, but let's make a plan. So in the next maybe 6 to 9 months, a year, and guess what? I bet rates will be lower too, so it'll be a better time to buy.
Looking ahead, what are some further factors that could further influence mortgage interest rates, and how should individuals prepare for potential changes?
Like we discussed earlier, there's been a lot of talk about the Fed rate cuts this year. Those have been optimistic that the inflation was going to be right at that 2% target that the Fed wanted it, but it's not there. And then Justin Powell said that they will leave short-term rates at current levels as long as needed to bring inflation to their desired target. This will have an impact on mortgage rates, so do not wait to purchase your dream home. If mortgage rates do decline, competition and demand for homes will increase. I agree, and move to much higher levels. Consider this a buying opportunity and refinance when the opportunity presents itself.
Keri, what is your favorite part about being the lender in every transaction?
Well, in the business, 25 years, and every day I get up, I love going to work because I love people, and people are my energy. And guess what? Every day is different because everybody's thing is different. Everybody's situation is different, and I love a challenge. So,
and every transaction is a challenge, and I
agree 100%.
And I always tell people, they always show everyone with the key at the end,
Like the whole.
Yes, but they never show the amount of work that every professional from the realtor, the inspector, and the lender goes into making sure that that transaction closes. I mean, can you talk a little bit about how much effort that y'all as a lender put into these transactions to make it work? Like sometimes the ways you have to save a deal and what that means?
Yeah, it happens not as often. Thankfully, it didn't happen quite that often. But when it does, you're like, oh my gosh, this is not the situation you want to be in, because when it comes to a home, almost everybody's buying their primary residence, and it's a timing factor. Someone may be selling, and they have to sell to buy or buy to sell, and it's all going to go perfectly. And there are so many people. I've never actually counted how many people people work on a loan, but it's more than 10 people. So everybody's got to do their job correctly. And when one person doesn't do their job correctly, that's when the wheels come off. So what I've always done in all the years in the business, I personally go in, I don't care if it's the appraiser's fault, the title company's fault, the realtor's fault. I walk in and I take full responsibility, because I feel ultimately it's me being like the head person. It's my job. And if there's ever bad news, I pick up that phone as fast as I can and deliver it, because waiting for that bad news is not going to help. It just makes the situation worse. We just jump in with 2 feet. And fortunately, being in the business as long as we have, and I think living in San Antonio, we've got great relationships with our appraisers, our title people, our realtors. So when they refer me to somebody and they know there's a problem, that they know that we'll do whatever we can to fix it. And 99.999% of the time we do.
Do you think consumers know how much work goes into closing the deal?
No, and that's okay, because my goal with every single client, I don't want them to know that it was so hard, or they were the hardest client I've ever had of all the thousands of people I've helped. I don't want them to ever know that. My biggest compliment that I get often is, Keri, you made this so easy. I want them to think that it's the easiest thing, but it's not. I just want to make sure it's seamless for them. That's my goal as a lender.
And if you're good at it, then that's what you do. Exactly. Have you all done such a good job at it, though, that people think, oh, you know what? I can go do this online by myself. I don't need an expert to help me through it.
They have, but they always come back.
Because the truth is, it takes a lot of people to get from seeing the house to actually moving in.
Well, exactly. But also, we all know everybody does their jobs differently. Some people respond quickly to emails, quickly to voicemails, quickly to texts. I hear when people come to me because they've had a bad situation somewhere else, I'm shocked at what some of my competition is doing, to be very honest with you.
So now you are in the business of helping people achieve the American dream. What is your favorite story about somebody got into a house that keeps you waking up every morning?
Okay, I'll tell you a good story.
Okay.
This is a good story. So this is a client. This is back in 2022, towards the end of 2022. It's a realtor that I knew, but not a realtor that I do a lot of business with. But she called me and had a client that needed some help. And she had sent him to 4 other lenders, and not one person could help him. He came to me, and I was able to help him on our portfolio product, because he only had 1 year of filed tax returns, and everybody else requires 2. And he made really, 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 really good money that year. And that probably made me the happiest, because he just didn't think he could do it. He came to me, he goes, "You're number 5, Keri. You are the end of the road. If you can't do it, I am done." And I could do it, thankfully. And he was really happy.
Do you think a lot of people start the home buying process with the assumption they're not going to be able to do it, that they're not going to be able to buy a house, or not by the time they get in touch with you?
I say 50-50. I'd say 50-50. The people that have bought, that's probably for first-time home buyers. It's people that have bought homes before, they've been through the process before, they know exactly what they're getting into.
It's not nearly as intimidating.
Exactly.
But the first time, it is extremely intimidating.
Well, you're getting ready to spend more money than you ever have in your entire life.
You're committing to something for 30 years.
That's
it's
scary.
A big commitment.
And people are like, okay, well, I'm 75 years old. Can you still help me with the 30-year? I sure can. I did someone for someone in her late 80s once.
Why would they buy something in their late 80s? Just
because she could, and she was healthy and felt good and had the money, wanted to do it. She did it.
She's like, I want to upsize or downsize.
Downsize, probably one story.
See, I always think I'm gonna downsize to a view. That's what I want. Something on a hill where I can just see everybody else.
See who's coming.
See, maybe. If you could give any advice to our members and our affiliates on the importance of being active in the association, what would that advice be as to why they should come to events or why they should participate?
It's very simple. I think this is for everything in life. You get out of something what you put into it. If you don't put much into it, you're not going to get much back. But go out there, try what's out there. There are so many options for realtors. I think more than most industries out there for realtors to help grow their business. There's so many great options out there for you. So utilize whatever you can.
I think that's a fantastic way to end our podcast with some advice for our members. And I hope that our members will take advantage of all the opportunities we have. And we, again, want to thank you and Jefferson Bank for being a great partner in our events as well. So thank you so much.
Well, thank you very much. You have been a great partner, and you've helped me out with my business through the years too. So thank you very much.
We look forward to future opportunities.
Let's go.